Hi guys, Canadian Wealth. Today I'm going to be going over 5 things every beginner investor should know in Canada. I'm going to be focusing on stock investments in this video. So if you are investing in crypto or another asset, then this video is probably not for you. But anyways, let's get right into it. Getting right into it here, the first thing that you want to do is make sure that you are financially ready to start investing. So make sure your financial situation is stable enough to where you can afford to start putting some money away towards the stock market. So some questions you want to ask yourself to determine whether you're ready is, do you have any debt or loans? For example, like you have any high credit card balances that you need to pay off, or any outstanding student loans, or any other payments that is taking all your money up. And you also want to have money in case of an emergency. So you want to have a lump of money put aside somewhere just in case an emergency happens, such as losing your job, getting laid off, or something like that. You want to have money that you can still afford to live off of in case of an emergency. If you have that and don't have any loans or debts or anything, and you have a lot of money and you can afford to put some into the market, then you're ready to start researching and start investing. So for tip number 2 is going to be picking a strategy and not going into the stock market blind. You want to find a strategy that applies to you. Everyone's strategy is going to be different, so you don't want to just copy Warren Buffett's strategy, although it may be a really good one. It might not be the best for you. So you're going to want to do research on strategies, like do you want to do a dividend strategy, a growth strategy, or do you want to do like a safe index fund strategy where you only invest in index funds? There's a lot of different strategies. You can combine these if you want. Everyone's is going to be different, so do your own research and pick your own strategy. Some factors you might want to consider when picking a strategy is how much money do you have to invest, how old or young you are, your age, how much time do you have in the market. If you're young, you might want to just go for like a index fund strategy or a dividend strategy, just because you have a lot of time. And if you have a lot of money and you're young, it might be better to do one of these. Or you might want to be a bit riskier and go with a growth strategy. You also want to think about how much risk you want to have. If you are a passive person like myself, I personally go with a dividend strategy. If you like taking risks, you might want to go with a growth strategy. Coming in at number 3 is take advantage of the tax sheltering accounts we have in Canada. This one is very important, and a lot of people do make this mistake of just putting it into a personal account and not taking advantage of the tax-free savings accounts or the RRSPs. There also is a RESP, but these are the two main accounts that most people are gonna be investing in. So you're gonna want to do your own research. I have a video I'll link down below explaining the tax-free savings account. Probably most people are going to start with this one, so I'll link that video below. But there's also RRSP, which may be better for you. So do research on the two. I'll link a video on the TFSA below, and it will kind of help you understand the tax-free savings account. But having your investments in these accounts is something everyone should do to save money on taxes. These are very, very good accounts, and the government of Canada made these accounts and for a reason. Like, they want Canadians to save money, and not using them and not taking advantage of them is just foolish, and everyone should have one of these two accounts, at least if they're of age to have one. Number 4 is keep an open mind. So don't have home bias. Don't be afraid to invest in US stocks just because of an international fee, or even like Chinese stocks or any other international stocks for that matter. The US stock market is the greatest market in the world, followed by China. Those are the 2 biggest markets in the world, so it would be silly to ignore those just because of a little international fee. Don't have home bias. Don't only invest in Canadian stocks. Like, it is an option if you're in Wealthsimple Trade. There's obviously a fee for buying US stocks on it, but it's 1.5%, and if you're a long-term investor, I would pay that 1.5% on buying and selling, just because the US market is like 19.9% of the whole global economy or something, and missing out on that market is just silly to ignore it. At least keep that option open. And you also want to make sure that your stock is available on the Toronto Stock Exchange. Always buy it on the Toronto Stock Exchange if you're from Canada. Some stocks are actually dual listed, so be careful. Like TD and Algonquin Power and Utilities, they're both dual listed on New York Stock Exchange and the Toronto Stock Exchange. So make sure that you buy on the Toronto Stock Exchange to avoid those fees. There are many companies that are dual listed on both the TSX and the New York Stock Exchange. So make sure you buy it on your desired one. If you're from Canada, buy on the Toronto Stock Exchange. If you're from the US and watching this video for some reason, buy it on the New York Stock Exchange. So number 5, research your investments. This may sound silly and be like, oh, of course I'm going to research my investments. But researching is not just watching a video and seeing, oh, this person told me to invest in TD Bank, so I'm going to invest in TD Bank. Research stocks and pick yours on your own. Like, you can take one from a video. Let's say I'll link a video down below with 5 good stocks that I personally think are good investments. Doesn't mean you should buy it. You should do your own research on those stocks before you buy it. I'll link it down below if you want to see if you like any of those stocks. But you always want to do your own research. So become familiar with like how to analyze a stock. Become familiar with factors that make a stock good and factors that make a stock bad. Become familiar with what PE ratios means, earning per share or EPS. Become familiar with what all that means. Become familiar with payout ratios. There's a lot of research that comes into the stock market. You got to do hours upon hours of research before you get really familiar with the stock, how the stock market works. And even the experts, they can't pick stocks better than a blind monkey. Half the times, like, you could just throw darts at a dartboard and pick random stocks, and it's gonna outperform like expert stock pickers some like 30% of the time. So like, you just want to do your own research for sure and pick good stocks. For an example of researching would be, let's say you want to invest in the VFV. It's an index fund. It is a way for Canadians to invest in US stocks without paying any fee because it's listed on the Toronto Stock Exchange. But you want to see what stocks are inside the ETF. You want to check which holdings are in it. If it has a bunch of small companies, the risk is going to be higher. If it has some great companies in there, which it does, in my opinion, then maybe it's a good idea to invest in it. I know this sounds silly, but do plenty of research before you put any money into the stock market. And that wraps up today's video. Thank you guys for watching. Subscribe if you are from Canada and want stock market investing advice. And peace.